Hello, hello, hello. Welcome. Our last week in June. Can you believe it? This year has been flying by. How exciting. We are here today for the Rabell Realty Group podcast. Kristen Rabell and
Rebecca Johnson.
And we have a very special guest a little later today after our Monday Market Moment, Andrew Cady of Epic Mortgage Team of the Fairway Mortgage Company. He's going to come on and talk about the current market conditions and our so-called housing bubble or not, and lots more. So we're excited to have him. But as always, let's start with our Monday Market Moment.
All right, let's take a look at the market, starting with Alachua County. Here we go. Hold on one second. There we go.
There we go.
All right. So in Alachua, as of June 1st through today, there are 278 currently active residential housing listings available, with 440 pending contracts since June 1st and 475 closed sales. Jumping down to Tampa Bay, that market sees 953 active residential single-family residents on the market as of June 1st, with 2,244 pending and 2,163 closed. So staying strong in both markets. Mm-hmm. You can still see the pending and the hey, Jose, the pending and the closed are still pacing each other pretty well. And then back up to Ocala, they look like they're in need of listings for sure. They've got 296 active listings that have come on as of June 1st through today, which I know we're at the end of the month. 660 pending and 613 sales closed so far for the month of June.
This is why live is so fun.
I know. I just rewound us to March. Sorry, guys. We're doing spring over. And then St. Augustine, and this is St. Augustine proper, has 70 active single-family residents. Mm-hmm. Yep, and with 29 pending and 34 closed. So
other than St. Augustine, everything's looking the same. Low amount of listings and quick close and pended all the time. So same old, same old. Let's look at the average price and average days.
Oh, yes, mm-hmm. I see. Okay, so average sold, there you go. You can see in Alachua about 287-ish, right around there, a little bit less, with the average list price is still around 320.
Wow,
days on the market,
way lower than what we thought.
Yeah, so
but average days is normal right now. Not to cut you off, but just the other day, someone was asking, why has this house been on the market for 30 days?
30 days is not that long, friends.
It's not, but when you see average days on the market is 8, I guess it's a common question.
It is true. I've seen people where they're like, the house has been on the market 10 days. Why aren't there 20
look,
offers?
Tampa's 8 days, Ocala's 9 days, so that's pretty normal around.
That's true.
We don't have one for St. Augustine because there's no way to look that up. But
yeah. So St. Augustine, they've got their sold and list are very close, right at 150.
Right. Well, look at that. Ocala also,
Ocala.
Tampa also. So what's up, Gainesville or Alachua County? What's going on?
Interesting.
Sold prices are lower than the list price, but not in Tampa and Ocala. That's why when people are coming up from Tampa, they're and Ocala and these other places where, it's really strong sold to list. We like you buyers, actually. You come in and you want to put on the top price. We're good with that because they're used to that where they are. All right.
So that's your Monday market for really the rest of June. And we'll talk about the month as a whole and maybe the last couple months next week. Mm-hmm. But we have our special guest.
Let's talk to Andrew here. He's already been on with us, watching, listening. So, Andrew, we know you, but tell us a little bit about yourself for our viewers.
Absolutely. Thanks for having me on. Yeah, I'm a mortgage lender. I run the Epic Mortgage Team over at Fairway Independent Mortgage. I started in the business early 2015 and have been basically building a team and building a business based on communication is really what my entire premise of building my mortgage team has been, is all about communicating, because that's obviously the biggest thing that's lacking in the mortgage industry is there's a lack of communication many times from the lender to the consumer, but more often from the lender to the associates in the transaction, buyer's agent, listing agent, title companies. A lot of those people are feeling left out of the transaction. Right. So I built a team. We've got 9 of us on the team now, and putting out some pretty fun numbers. We closed just over 400 houses last year, and we're looking to obviously grow that exponentially.
Great job. We'll talk about that a little later because we've talked about it right before we got on, and we'll talk about your communication skills and what you bring to the table. But our very first question, it's huge these days, is, are we in a housing bubble?
Oh man, it's the question. It seems that everyone's feeling it,
right?
And I can't say I blame them. People are coming in and they're putting offers on homes $30,000, $40,000 over list price. And my short answer to that is I don't believe we're in a housing bubble or anywhere near a housing bubble right now. What caused the troubles we saw in 2008 and 2009 was primarily due to poor mortgage lending practices. Right. And we haven't seen those guidelines go back to, ninja loans, no income, no job or assets. We've actually seen just in the past 2 years, guidelines have tightened up. They've, especially on some specific products we'll talk about a little later, it's getting more and more hard to get these mortgages closed. Mm-hmm. And so we're not writing loans that we feel like, why are we writing this loan? We're writing very clean transactions right now. Really, the pinch we're feeling with a lack of inventory, it dates back 10 years. If you look back just at the historical numbers of what housing, this isn't, crash time, but this is from 2000 to 2010. Builders from 2010 to 2020 were built just about 50% of the new construction homes they built in the previous decade.
And those would all be resales by now, or many would be resales by now. And we
Correct.
don't have those.
And we don't have those. You also get a lot of people moving into Florida, whether it be political reasons, whether it be a state that doesn't have a state income tax, whatever the reasons are, there's a mass migration to Florida right now. And you couple that with 10 years of underbuilding from the builder side of it, and we've got a pinch on inventory that I don't see going away anytime in the near future.
Now, do you think that refis have also taken part in this of, not being in a housing bubble? We're able to refi our homes or get these lower rates and live
Absolutely.
in our homes way cheaper?
Way cheaper, and it's also a deterrent from people wanting to sell their home. Maybe not quite today. We saw interest rates in the mid 2s, and now they're 3 and an 8. They're right around that 3 mark. That might not be a big detractant from someone saying, I'm not selling my home. But if interest rates continue to go up, and interest rates go to 4.5%, 5% in the future, someone who's sitting on a 2.5 interest rate, that may give them pause to want to put their home on the market. They may be like, we don't want to move that bad. So I think we're in a housing, definitely not a bubble. We're in a market that's going to remain extremely aggressive for the foreseeable future, especially here in Florida, Texas, Tennessee. There's a lot of states where they're seeing the same exact thing we're seeing. And Florida is definitely right up there with it.
Yeah, I saw an article, and it was talking about how people were moving to, I think it was North Carolina, Tennessee, Texas, Florida, basically better climates in terms of weather. And then no income tax was a huge...
Yeah, no state income tax is big.
And that affects quality of life. So, communication is key. There we go.
We'll get back to that.
We'll get into that. So I am glad to hear that you don't think it's a bubble. And I do notice that I remember when,
Right.
way back in the day, people were buying homes. I mean, I sold one to somebody, he didn't have a job. And he was able to get a loan. Or people were getting cash back, and you were like, wait, you don't even have cash to put down. So I haven't seen any of that. I do feel like it's a lot tougher to get a loan today than it was.
Now, how is that
10 years ago.
translating to these buyers? Because we notice as realtors, how are you noticing as lenders, how the buyers are reacting to this? Because they have to turn in a lot more than they did before, and it's a lot harder. And I have a lot of them say, or our agents are telling us, well, the buyer is saying that they didn't have such a hard time back when they bought, before, or
Every day
their
of my
parents
life.
or their
Every day of my
family.
life.
Right, exactly. So it's affecting them in their minds a negative way because they have so much to turn in. But, put the positive light, the spin on them so that we can tell them this is why it's positive to have to turn in everything.
Would you rather go back to 2000 and fly without TSA? Or are you happy that there's some kind of a safeguard to protect us? Because that's what's happening in the mortgage industry.
Right.
There's safeguards that have been put in place to prevent another 2007, 8, 9, a massive market meltdown. There's safeguards that have been put in place. And like I've said, one of the biggest reasons I am confident in this housing market is just what we've seen over the last 12 months. You know, in February 2020, we were writing loans as low as a 580 credit score.
Right.
COVID hits. 3 months later, minimum credit score jumped to 660. And then it went down to 640, then it went down to 620, back down to 600. But lenders are very, very, very careful right now to not just open the floodgates to anyone. You got a pulse, you get a mortgage.
Right.
They're still putting it in. From a consumer's perspective, yes, it can be frustrating. You know, there's a lot of times where we hear that every single day. Well, last time I bought a house, I didn't have to provide that. Well, that's not the market we're in today, especially in the world where when you see unemployment numbers go as high as they did, like verifications of employment, 24 hours before closing. Now that's backed off to 7 days, but there was a while where it was like,
that.
it was like rinse and repeat. We're going to call the buyer the morning of closing to make sure that they still have a job, because so many people got laid off that they weren't always forthcoming and telling us, hey, I don't have a job right now. So yes, it's a pain in the rear end sometimes to get all the documentation necessary, but understand that there's a safeguard in place to prevent you from ending up so underwater on your house that you aren't able to sell it and end up in foreclosure.
So as realtors, we need to let these buyers know that it's not going to be a piece of cake, a walk in the park.
Correct.
As
Set
a
that
lender, you're talking
expectation.
about, setting the expectation. So as a lender, and you're talking about communication, do you have a formula that you and your team work through when you first talk with these buyers?
Yeah, so when we first speak with the buyers, the goal is to kind of open the door and understand their individual situation. So we're going through a checklist of items. The property they're buying, is this a primary residence? Is this an investment property?
Right.
What are they comfortable in payment? That's probably one of the biggest things that I see lenders do all the time that I don't understand. They ask the question, how much do you want to be pre-approved for?
Right.
When the real question should be, what is a comfortable payment for you? And let's work backwards from that. Because there's nothing worse than telling someone, hey, you're approved for $350,000. And they go under contract on a house, they get their loan estimate, and they call and they're like, oh my God, I can't pay that payment. We have to cancel the transaction. We want to work backwards. So we're going through occupancy, we're going through job history, we're going through what they're comfortable paying in a monthly payment, where their source of funds is going to come from. And then we're going to get them to fill out a base application. And from there, we're going to really nail down what documentation is necessary. And some clients, it's more complex than others. Some people we can put a pre-approval together for in a matter of 5 minutes. If you're W-2'd, you've been on your job for 20 years, you're salaried, you've got $300,000 in the bank, like, here's your pre-approval.
Your realtor buyer, not so much.
Yeah,
Self-employed.
if you're
Independent contractor.
self-employed, you own part of 2 companies and you own 6 rental properties that don't cash flow.
Yeah, a little harder.
Be prepared for 3-4 days of work to get your pre-approval in hand. And we're not trying to do that to slow down your home buying. We're trying to do it so we don't have to come back and say no when we previously said yes.
Right, exactly.
That's one of the biggest things that my team and I hang our hat on is last year, 406 transactions closed. And we did that with 7 underwriting denials all year. We're batting about a 98.6% closing rate. When we say, yes, you're pre-approved, 98.6% chance that's going to walk into the closing table.
Because you're doing everything up front.
Right.
Getting them ready. Yeah.
There's nothing worse than saying yes and having to retract and say no.
Yeah.
That's the worst day of my life when I have to make those calls.
Well, as I told you, we go real fast here, so great conversation. But what do you see the long-term outlook to be?
For interest rates?
Yeah. Well, for even though this says for interest rates, I want to say, it's not a housing bubble. We know it's not going to change in a year. We all have the writings on the wall. When do you think this is going to change? I mean, I know you don't have a crystal ball, but bring out your crystal ball and tell us, where do you think this is going to go, or when it's going to change, and then also the rates, since you know more about that than we do.
Yeah, so rates are going to play into it. Interest rates are traditionally follow the bond market, but they don't go lockstep. So you'll get the bond market move up and rates will move down sometimes, but just historically, they typically follow each other. And the enemy of bonds is inflation. And so there is going to be interest rates rising. It's already started, and we continue to forecast it to continue to come up. Over the summer months, we may see it hit a little harder, and then we'll probably see it come back a little bit towards the end of the year. And the reason for that is the year-over-year inflation numbers. Last year for April, which they always come out a month later. So April's numbers came out in mid-May. It was the first time we've seen in a very long time a year-over-year inflation over 2%. And so we've seen this, and now we're going to see it where we've had very low inflation for April, May, June, July of last year. So through August of this year, we're going to be getting these numbers where year-over-year inflation is way exaggerated. Right. So I think we may see a bit of a spike up for the summer, and then it'll probably come its way back down a little bit. But overall, interest rates have been on a long-term trajectory down for 20 years.
I mean, when we started, they were at 6-7%.
Correct.
If you were a good qualified buyer, I remember thinking it was awesome to get in the 6s. So I always think
and everybody was saying, "Oh, it's so low," because before that, they were way higher than that, 13, 26.
And now we've been spoiled on 2s.
I know. That's where I'm like, I think it's almost comical that everyone's like, "Oh, the rates, they're so high," and I'm like, they're in the 3s and 4s. Yeah. You need to simmer down. This is like a car rate, like a rate that you would get a car at.
I don't feel like people are saying, "Oh, they're so high," but the second they go above 2, when they're in the 3s, they're like, "Oh, wow, it's going up."
It's that 1% or 0.5% threshold where everybody gets uneasy for about 6 months, and then it becomes normal. So I think the housing market remains strong as long as interest rates stay below about 5%. Right. Once you see that come over the 5% market, you're going to start to see, again, another tightening of inventory because people are going to be hesitant to sell the home they have such a low interest rate on. So I think we're in a very good housing market for quite some time, especially here in Florida. I really think it's going to maintain strong. But I would expect interest rates to tick up. Mortgage Bankers Association says somewhere around 3.5% by end of year, potentially closer to the 4% by end of next year. But that also could change on a dime because we can't forget that the Federal Reserve is buying billions and billions and billions and billions of dollars of mortgage-backed securities on a weekly basis. So at any moment, if they decided that they're slowing that or backing off or stopping isn't the end of it. Once they stop, then they have to offload the balance sheet of everything they bought. Right. And at some point, they're going to have to back off of it. And that's when we're going to see rates really start to change on us.
So... buy now, sell now.
Buy now, sell now.
That's all I hear. Buy now, sell now.
One of my favorite. Buy now, sell now. Yes. One of my favorite analogies.
You kind of have to do before. Buy it first and then sell it because you can sell it pretty quickly. 8 days on the market, and then you can still close.
That's only if you're average. And we're above average, so we'll probably sell it before 8 days.
Yeah, and so a lot of people are like, I'm not paying $20,000 over. I don't feel that house is worth $400,000. I won't offer over $380,000.
Right.
Okay. But if you're selling a home and you're a move-up buyer, someone's probably going to pay $20,000 more for the house you're selling.
The conversation we have
and so it's ultimately going to be a wash in the end.
Yeah, that's why. Yeah.
And that's so many people. If you're just selling, if you're just buying for the first time, it's a sticker shock.
Sure.
If you're selling a home and buying a home right now, somewhat of a wash.
Even somewhere. Listen. I love this conversation. It's really hard to say, but we've got to take a break.
Let's take a break,
and we'll be right back.
I was looking to join Rabell because I was at a large big box broker. I found myself a tiny fish in a big sea. So I set out looking to solve the problem of not feeling connected to my broker. I hadn't even met my broker. When I walked into Rabell Realty Group and the brokers were on site, there were agents in the office that were friendly and helpful, I knew I had found the solution to my problem. So what made me choose to work for Rabell Realty was really an encounter I'd had with Kristen early on in my career. I was showing a house and it was her listing, and she walked out and had her new baby strapped to her. Being a family girl and having a kid myself and wanting more, I knew I wanted something that was family friendly. And so that encounter that had happened early on in my career made me feel comfortable to know that wherever life took me, babies or no babies, I would have a place at Rabell Realty Group. I would recommend Rabell Realty Group to somebody else for the same reasons I found it. Synergy, heart, and hustle are our core values, and we really practice that here. The heart is here, I think, with everybody that works in this office. And the synergy, while we are not teams, so to speak, we work as one big team, and you just don't find that at other brokerages. I put my heart into everything I do, and Rabell does the same. You can tell with their branding, their marketing, The broker support of their agents. They're one of a kind.
All right. Hello. Welcome back. Thanks for joining us now or continuing on with us. We've got a great conversation going about the current market with Andrew Cady here.
And he just apparated onto the screen.
He wasn't there, and now he is. Look at that.
Here.
It's magic. Love it. Let's talk. Let's keep going. All right. So great conversation. Let's continue on with that. So,
Back to long-term forecast.
Yeah. Mm-hmm.
Long-term forecast for me for the state of Florida is really going to be strong housing market for the next foreseeable future, 2 to 3 years of strong market. The only way that, in my opinion, really changes is if the Federal Reserve does something to back off of their current buying, and that's really going to be neither here nor there. Nobody can have a pulse on that market.
We can't figure that out yet. So, all right. Well, cool. So, we got a question. Andrew, when I have potential buyers ask when they might be able to afford to buy above average credit, but not a lot of savings and due to the pandemic, no stable job history, is this a market for affluent, I think you're saying? Yeah. Affluent, not alluent buyers?
Yeah. I don't...
Before you did say if you're buying and selling, it's a wash.
Correct.
But if you're buying, it is sticker shock.
It is sticker shock.
And so I don't want to use the word affluent, right? But, I know FHA buyers are struggling a little bit more. Anybody who needs help. So
correct. Yeah, a lot of the down payment assistance programs ship money out of money.
Yes,
there's definitely a lot of challenges out there for that right now. Mm-hmm. Getting a VA offer accepted and an FHA offer accepted can be challenging. It's one thing if a year and a half ago that FHA offer was the only offer on a property. Mm-hmm. Now it's maybe one of 26. And so, yes, there's definitely challenges to it right now. I'm personally am very passionate about VA loans, and I think they don't get the credit that they deserve. Mm-hmm. It's something I battle every single day is to get our veterans into homes. But yeah, it can be a challenging market right now for buyers that don't have perfect credit or don't have a lot of money in the bank. Right. It's not saying that it can't be done, but it definitely can be a challenge to walk that road right now if you don't have the ducks in a row.
Now, I think when we change, is it going to be any better in that 2, 3, 4 year forecast? Or will we have hit this threshold of pricing and we're not really able to go down far enough for that? What I think what would happen is that they're not going to go up against a lot of people, like you're saying,
correct,
a year ago, 2 years ago.
Yeah, so I think the opportunity will open up. And I'm also confident that we're going to see some changes coming down the pipeline to make housing easier for credit challenge buyers. Okay. Whether I think that's a good thing or not, I'm going to leave off the table. Mm-hmm. But I do think we're going to start seeing that come down the pipeline. The FHA loan change, I think we're going to talk about that. That's been a massive, massive thing that has been in place for a long time that's getting rolled back. And I do think we're going to see some opportunities open up for challenged buyers to get back into the housing market. But whether their offer is taken seriously in the current market is going to be, it's really going to depend on the property. If it's a property that's got 30 offers and you got a cash offer in there and you've got a 40% down conventional offer, it's really, really a tough time for an FHA offer to slip into it.
Mm-hmm. Yeah, one of our realtors in Tampa was sharing a story. Yep. Paul, if you're listening, you can chime in. And he said the house had come on the market, and within a day, I think he said 41 offers. Mm-hmm. And he played a game on our internal page.
385.
385 or 387 or something. He said, guess where the starting
His
point.
offer was 399. And he said,
you needed to be at 450 or higher to even be considered.
Just even considered.
Yeah. That's crazy.
Now that's Tampa. You're mostly in Jacksonville.
I just did one in Tampa. It was a VA loan. Appraisal came in at $400,000 on a $500,000 purchase.
Oh my gosh!
And the buyer immediately called and said, "We'll pay over."
Really?
$100,000 over.
Yeah,
and that's the thing, everybody with your VA buyers, they're usually a much stronger buyer than you realize.
Statistically proven to be the strongest pool of buyers you deal with. They have, on average, more assets in the bank and a higher median FICO score and a higher average income than any other pool of buyers.
Yes.
And they're using their VA because they have
privilege.
They have a privilege, and they served and protected us. And so
this is not a down payment assistance grant.
We also are passionate about VA.
This isn't a DPA grant that they get zero down. down. This is something they've earned.
Well, let's talk about that these FHA changes, because
Yes.
we're running out of time, and that's a really good. We had that great question from Duffy, and I think this
So
goes along with
FHA,
it.
FHA is something I've said for multiple years now. I'm surprised someone hasn't sued HUD, because in my opinion, the way the FHA guidelines were was borderline discriminatory. Every loan program out there allows leniencies in student loans. Go, for instance, with conventional.
Right.
If you have a student loan and let's just use easy math, you've got a $100,000 student loan and you're on an income-based repayment plan and your payment's only $60 a month, we can use that 60 going conventional. If the loan is in forbearance, we can use 0.5% of the balance as a payment, or they have even really deep breakdowns where you can do amortization schedules and really get the payment low to use it. FHA has just been completely hard-nosed about it. 1% of the balance, no matter what, even if a lower payment's reporting on the credit report. So if someone's got a $100,000 student loan balance and their payment that shows up on credit that they can prove that they've been paying of $100 a month, I'm sorry, we have to hit you with a $1,000 a month payment. I would confidently say hundreds of thousands of people over the last 5 to 7 years have been denied financing specifically through the FHA program due to their student loan balances. And that changed last week.
Thank God. I remember when they made the change initially, and it knocked people out. We were selling a new
Instantly.
construction neighborhood in Newberry at the time, and we had somebody who was supposed to be buying, but because the build was delayed, and then that change hit, they couldn't.
Yeah,
or
and-
actually, maybe that was the day the government shut down for 10 days and put us 3 months
Oh
behind.
my
on every
gosh,
loan.
that was that actually.
Yeah, so and this is an immediate change.
Yeah,
It's
good.
it's actually a required on all
Perfect.
new loans after August 16th, but allowed immediately. And the changes are, if you can document what the current payment is, you can use it.
How would you document it? Showing that you've been paying what you've been paying.
If it's reporting to the credit report,
Okay.
we can use it. If there's no payment reporting, we can use 0.5%, so it cuts the payment in half. Or if we can document what the payment is through the student loan company, that they're in an income-based repayment plan and the payment's actually $40 a month. If we can document it, we can use it.
And you can help the buyer figure out how to find
Absolutely,
this
yeah,
documentation. Right.
exactly. We'll walk through the documentation necessary to get that done. But that's a massive change
it's
that just
huge.
opened the door. I personally went back 12 months in my pipeline, and I pulled a report of every FHA application that had a debt-to-income ratio over 57%, which is over their current maximum allowed.
Right.
And just me, in the last 12 months, have turned down 78 buyers. And so we're in the process of getting those 78 people back on the phone, letting them know, hey, things have changed. There's an opportunity now for you to obtain financing. So massive move.
Amazing. So that's great. For
I'm
these
excited.
buyers.
I'm
Yeah.
excited
think
about
that's
it.
awesome.
Puts all these buyers back in.
I'm
Yep.
just thinking and reliving back when we had to make those phone calls when it was literally like just overnight. They were like, "Sorry, you're actually not."
And
We
with-
knew this change was coming, but we didn't think it was going
Right.
to be
And
like
with so many people
Oh, yeah.
going to college and having these huge student loans, this is really large for these.
It
these
is. Yeah. I mean, those
potential
phone calls
buyers.
were the same I had to make last year when our minimum credit score shot up 80
Right.
points.
Yeah, that was hard. I remember that.
And all of a sudden I've got 64 pre-approved buyers that I have to call and say, hey, you're not approved anymore. We'll call you when things change.
so
but-
now we're back on a flip side of that and a more positive note.
Yes.
Yeah.
And
Like it.
I'm excited about it.
Right. So I would say if you had an FHA, you were an FHA buyer last year and were denied, get back with Andrew and see
Yeah,
if you can get
100%. If you're an FHA home buyer, and FHA is one of those programs where conventional FHA, a lot of times if you're in that
It's the same.
680, 660 or below credit score, FHA is going to be a lot more lenient. So a lot of times people will lean towards that in that particular credit score range. And so if you've been denied and you have student loans, you've been told no, give us a call. Let us take a look at it. It's worth a shot.
Right on. So we are kind of at the end. Do you want to say anything about second home and investment loans getting more expensive?
Yeah,
Is that-
second home and investment properties are becoming much more expensive. It's something you have to be prepared for. Fannie Mae, Freddie Mac, they are the government-backed entities behind conventional loans. And they have decided to limit the percentage of second home and investment properties that can be delivered to them by each lender. Initially from it averaged about 13%, they cut it to 7%, and now they've come down to 6%. And for the only way we're seeing lenders actually stem the flow is to just raise the interest rates on it to drive the buyers away from it.
So is this to help the first-time home buyers to be able to obtain homes, or just fully a money
Because
standpoint?
it's a risk, maybe.
I think there's a lot that goes into it, but I believe it's a money grab on a massive scale, which is the reason Mark Calabria was ousted last week as the head of FHFA, which is the government-backed entities of Fannie Mae, Freddie Mac. He was ousted last week. A new person's coming in, so we have some hope that these changes might be rolled back. But as of right now, we're seeing a lot more points and a lot higher rates for second homes and investment properties from...
I blame Airbnb and VBRO. No, I'm just joking.
Well,
Everybody's buying all these places.
Well,
That's
I mean,
what they
I've
did
seen
during
the
COVID.
biggest amount of flippers and investors that I've ever seen, even with these high prices. And maybe I'm paying more attention, but I'm definitely noticing
They're
it
out
more.
there.
There's a ton more flippers, and that's why I ask, are they trying to pull the flippers out so the first-time home buyers can buy, or is it just because they see there's so much money out there, let's just charge them more?
And I also think it's a mitigated risk management on their side, is that second home and investments have the highest default rate of any particular loan type.
There you go.
And if we're seeing unemployment numbers rising and they're seeing all these changes, it might just be a risk management thing on their side to
If it's
say,
just
we're going to
that,
scale it back.
I think they would turn it around, though, if it was just that.
They-
I think
they
there's a
never
little
know.
bit of everything.
Yeah.
But more the
It'll
second
be
thing.
exciting to see.
All right. Well, Andrew, thank you so much. It's always a pleasure. You've got so much knowledge and passion.
Thank you.
So it's
I
really great. So
appreciate
thank
you having me on.
For sure. Is there a way to get out in touch with you? Do you want to say it? We don't have a
you can
screen
find me
for
on
it.
social media, any social media platform at
true.
Epic Mortgage Guy or 904-500-EPIC.
And he's got some of the best social media. You'll probably just want to share it because it's such great information.
Yay!
And it's fun.
It is fun. All right. So we do have our 5-year bash. Is that coming on?
I know
All right.
I know we don't look it, but
All right. We
We're
are
5.
5 years old this year. So tomorrow's our birthday party. Woohoo! June 29th. We're going to have it from 5 to 8. Yes, down at the Boxcar Depot Park. We weren't inviting everybody, but hey, it's last minute. Come if you want to.
if you have nothing fun to do on a Tuesday, come have tacos.
Right. Taco Tuesday with Rabell. All right. Let's see. We've got property management.
That's right. So if you have a property that you do not want to sell, but you're sick and tired of dealing with tenants, you can call me. I'm right here standing by, taking donations of all types of properties to manage. Now, just kidding. Our team will qualify you, see if it's a great fit for you, and we'll take over finding your tenant, managing the property, and keeping it in excellent condition.
Sounds good. Hey, are you looking to start your career in real estate? I mean, it's literally the best career out there, and everybody's in real estate. Why aren't you? Or are you really unhappy with where you are? Call us. Join our team. Get more information at join@buysellrebell.com.
And if you can't get enough of Rabell Realty Group and Kristen and Rebecca, you can find us on all the social media outlets.
All of them.
Yep, all of them.
All of them.
LinkedIn, TikTok.
They're not even all here.
Yeah, they're not
all of
even
them.
all here.
Just come find us.
Just come find us.
Buy Sell Rebell.
Come join
Come
us.
on, Abel.
Don't forget to
bring
like
Amy.
and subscribe.
Like and subscribe. YouTube. You can watch these and come
all
back
of our other
every single day.
videos.
And all of our houses that we have for sale too are great videos.
That's right.
Did you know we have a blog? I don't know if you know, because you need to get on there and read all of the information that we have on here, plus more, buysellrebell.com/blog.
All right. And if you are thinking about getting a podcast, the first step is to come on to the Rabell Realty Group podcast and check it out, and then talk to Elio with Fiesta Media at 352-327-5089.
You'll love it.
It is
You'll
a lot
have
of
to.
fun.
It's really fun. And all for fun, but we also want to say to Surfside, Florida, to the condo that collapsed. We're praying for you, thinking of you, and hoping to find all of you. Anybody else? Nope.
All right.
Prayers.
We will see you next Monday at 2 p.m. It'll be July.
It'll be July, my favorite month,
July
other than
5th.
April.
April is the best month of the year.
It is
Let's
the-
not
when
even
is your
get-
birthday?
February.
February. Ugh, lame month. No, I'm just kidding. We're both Aprils. April's the best.
It's
But
okay.
July is always fun because it's middle
I just
of the
precede
year.
you guys, that's all.
Ooh.
Oh, first is the worst. Second is the best. No, I'm just kidding. All right, Andrew, it was
Oh my
fun.
goodness.
Thank you.
Thanks for
It's been a
coming
pleasure.
on,
Thank
and
you,
we will see
everyone.
Take care,
We'll
guys.
see you next week.